Brian Tracy once said people who develop the ability to continuously acquire new and better forms of knowledge they can apply to their work or to their lives will be the movers and shakers in our society for the indefinite future. And that's why Business Insight is designed to continually bring you news and wisdom for business growth and development. I am Olaoluwa Awe. Today, it's all about scalability. But before we get to that, is the business news. Stay tuned. Nigeria will save at least 70 naira per litre on the price of petrol if local refining is fully operational, according to the National Controller Operations of the Independent Petroleum Markets Association of Nigeria, Mike Osatui, who emphasized the importance of the federal government investing in functional refineries. While he confirmed that contracts for revamping the refineries have been awarded, the repairs must be completed as soon as possible to ease the financial burden and stress of importing petroleum products into the country. He mentioned several benefits of having operational local refineries, including a significant reduction in freight and ship-to-ship transfer costs. This in turn would lead to a reduction in the cost of petrol by around 60 naira to 70 naira per litre, according to him. Additionally, local refining would result in lower insurance costs, quicker product delivery time, and increased employment opportunities. Importing petroleum products currently takes about 30 days for ships to arrive in Nigeria, and the country has to pay for hiring the vessels. However, with functional refineries, the product would be available within the day, cutting down delivery time and associated costs. Away from that, passengers and travelers can now expect the normal car hire services to be fully operational once again, providing them with convenient and reliable transportation options at the international airport in Abuja, especially when navigating to and fro the Nnamdi Azikiwe International Airport. The Federal Airports Authority of Nigeria, FAN, had yesterday made a decision to temporarily suspend airport car hire services at the Nnamdi Azikiwe International Airport. But this was in response to a dispute among the various car hire operators that had been significantly impacting the smooth functioning of the airport car hire services. The announcement of the suspension was made by Abdullahi Yakubu Funtua, the Director of Public Affairs and Consumer Protection at FAN. However, a positive development has unfolded since the initial announcement of the suspension, following a productive meeting involving the concessionaires of the car hire services and the service providers. The issues that had led to the suspension have been successfully resolved. As a result, FAN has officially lifted the ban on airport car hire services at Abuja Airport and has given the green light for these services to resume their operations, according to Abdullahi Yakubu Funtua. GlaxoSmithKline GSK, a British multinational pharmaceutical company, has announced its decision to exit Nigeria after 51 years of operation in the country. GSK plans to cease the commercialization of its prescription medicines and vaccines in Nigeria and transition to a third-party direct distribution model for its pharmaceutical products. GSK Nigeria PLC, in a statement, said the company's board has concluded that there is no alternative but to cease operations, and it is working on a draft scheme of arrangement to return capital to shareholders other than GSK UK, pending approval by the Securities and Exchange Commission, SEC, and shareholders. Shares of Chinese technology firms, including Alibaba and Bilibili, experienced a decline after China's cyberspace regulator, the Cyberspace Administration of China, CSE, recommended limiting smartphone usage for children under 18. The proposed law would restrict children to a maximum of 2 hours of phone usage per day and ban them from accessing the internet on mobile devices between 10 p.m. and 6 a.m. local time. This move follows gaming restrictions imposed on children in China 4 years ago. The CSE's proposal also mandates industry players such as mobile phone device makers, apps, and app stores to develop a minor code function that sets usage limits based on age. The announcement of these restrictions has caused concerns among investors, leading to a decline in Chinese tech shares. Now let's get to the stock market. The Nigerian Exchange Limited, NGX, has listed the federal government's 130 billion sovereign Souq on its platform in collaboration with the Debt Management Office DMO. The Souq, known as the 10-year 15.64% Ijara Souq due 2032, was officially listed on August 3, 2023. A Souq is an Islamic financial instrument similar to a bond through which investors can participate in the financing of government projects while complying with Islamic principles. The listing of the sovereign Souq on NGX provides an avenue for investors to trade and participate in the Souq market. The sovereign Souq was open for subscription in November 2022 with an initial offer of 100 billion naira. It received significant interest from investors with a total subscription level of 165.25 billion naira, surpassing the offered amount by over 165%. To accommodate the needs of the various investors who subscribed to the Souq, an allocation of 130 billion naira was made. But now to the stock market proper. Nigeria's equities market experienced another positive trading session yesterday, Thursday, with investors engaging in bargain hunting in banking, consumer goods and insurance stocks. The market recorded a 1.55% gain, equivalent to 542 billion naira in value. As a result of this positive close, the market's year-to-date return reached 27.34% increase. The Nigerian Exchange Limited also saw its all-share index rise from 64,267.36 points to 65,263.06 points, while the equities market capitalization increased from 34.973 trillion naira to 35.515 trillion naira. Notably, PZ Cussons led the gainers with its share price rising from 16.5 naira to 18.15 naira, a 10% increase. Nigerian breweries also saw a 10% increase, rising from 38 naira to 41.8 naira. Other companies like Sterling Financial Holding Company, Chelarams, Dangote Sugar Refinery also experienced significant gains. During the trading session, investors exchanged 445,000 or over 445 million shares valued at about 5.087 billion naira in 7,095 deals. Stocks of Sterling Financial Holdings Company, FCMB, Access Corporation, Japan Gold and Fidelity Bank were among the most actively traded on that day. And market analysts expect the NGX to deliver double-digit returns for the year, possibly outperforming the earlier forecast of 15% returns for 2023. Since President Bola Tinubu's inauguration on May 29, the NGX has shown significant growth, gaining approximately 15.4% during that period. But away from Nigeria, we'll move to the stock markets in Ghana. As of the last trading day, the Ghana Stock Exchange Composite Index stands at 3,122.86 with no change in value for the year-to-date period. However, the index has seen a significant increase of 678.95 points or 27.78% during this time. The total market capitalization of the Ghana Stock Exchange GSA is currently at 73.66 billion cedis. Now let's get to South Africa. The Johannesburg Stock Exchange JSE recorded a positive performance with the FTSE JSE Africa All-Share Index standing at 76,747.20 points. This reflects a gain of 267.68 points or 0.35% compared to the previous trading session. Away from that, the Egyptian exchange, the EGX, saw a marginal decline on August 3, 2023, with the EGX 30 index standing at 17,451.44, down 3.49 points or 0.02% from the previous session. Over the longer time frame, the index has shown positive performance with gains of 19.54% year to date and 82.95 or 82.94% over the past year, while it has risen by 62.70% over the last 2 years. Yesterday in the UK, Britain's FTSE 100 faced pressure due to disappointing earnings, but it made a partial recovery after the Bank of England, BOE, raised interest rates by 0.25% points. as expected. The index initially dropped by 1.6% before the BOE's decision, and the BOE's interest rate increase brought it to a 15-year peak of 5.25%, easing concerns of a more aggressive rate hike. Market participants found relief in the moderate rate increase, as a larger one could have been seen as a policy mistake. The central bank cautioned that borrowing costs are likely to remain elevated for some time. Despite the rate hike, rate-sensitive sectors like home builders, real estate showed resilience, with home builders gaining 0.2% and the real estate sector rising by 1.0%. Further rate hikes by the BOE will depend on economic data going forward. And investors still in the UK have withdrawn over £1 billion from environmental and social focus funds since May. Instead, they are putting their money into safer investment like bonds and money markets funds. Funds that focus on environmental, social, and governance (ESG) issues have seen outflows for 3 consecutive months, with a record £376 million withdrawn in July. UK investors are also shunning stocks, having withdrawn £983 million from equity funds in July. Fixed income funds benefited from this trend, receiving £347 million inflows in July. Money market funds have been particularly attractive due to rising interest rates, receiving £403 million inflows in July and surpassing the inflows of the past 4 years combined over the last 6 months, according to data from Calastone. In the U.S. markets, the Dow Jones Industrial Average, the NDX, is down by 0.05% at 35,266.41 points, showing the negative trend. The Nasdaq Composite Index is up by 0.08% at 13,984.74, indicating a positive movement. The S&P 500 Index is down by 0.13% at 4,507.45 points, experiencing a negative trend. The United States Price Return Index is down by 0.17% at 388.80, also showing a negative movement. Now let's get to the Asian stock, the Asian Pacific region, where the Nikkei 225 index is down by 1.68% at 32,159.28, showing a negative trend. The Hang Seng Index is down by 0.49% at 19,420.87, also experiencing a negative movement. However, the Shanghai SE Composite Index is up by 0.58% at 3,280.46, with a positive trend. Meanwhile, the S&P ASX All Odd Index is down by 0.61% at 7,522.30 points, showing a negative movement. Now we move to the commodities market and we start with the price of gold. The price of gold is currently at $1,932.9. It has decreased by 0.23%, which is considered negative. But gold is often seen as a safe haven asset, and a decrease in the price could indicate a slight improvement in overall market sentiment, with investors potentially shifting towards riskier assets. Moving to copper. The price of copper is currently at $744.55. It has increased by 1.01%, which is considered positive. Copper is an important industrial metal, and it is often seen as a barometer of global economic activities. An increase in copper price could signal optimism about economic growth and industrial demand. We move to the Brent crude oil now. The price of Brent crude oil is currently at $85.11. It has increased by 2.30%, which is considered positive. An increase in crude oil prices might be influenced by factors such as supply constraints or geopolitical tensions. It could also indicate expectations of higher global demand for oil. To the commodities market in the United States, the price of soybeans is currently at $1,433.75. It has increased by 0.28%, which is considered positive. The increase in soybeans price might be influenced by factors such as supply and demand dynamics or weather conditions affecting crops. Corn for September 14 delivery is currently priced at 484.25 cents per bushel. It has decreased by 4 cents, which is a negative change of 0.82%. This means that the price of corn futures has declined. Wheat for September 14 delivery is currently priced at 631.25 cents per bushel in the United States. It has decreased by 8.75 cents, which is a negative change of 1.37%. This indicates a decline in the price of wheat futures. Now, as at Thursday, yesterday, the Nigerian naira experienced a significant depreciation, reaching a new low of 885 naira per US dollar at the parallel market, commonly referred to as the black market. The closure of the foreign exchange FX market on the same day saw the naira's value weaken by 1.14%. The exchange rate for the US dollar climbed to 885 naira, in contrast to the 875 naira rate recorded the previous day, Wednesday, at the parallel market. But market analysts and traders pointed to robust demand for the US dollar from both importers and travelers as the driving force behind the Nigeria's depreciation, or the naira's depreciation. This increased demand for dollars placed upward pressure on its value relative to the naira. And that's the market trend. Let's take this to another level. Scalability is the measure of a system's ability to increase or decrease in performance and cost in response to changes in application and system processing demands. But the question is, how scalable is your business? Stay tuned to Business Insights to find out. I am Olaoluwa Awe. Welcome back to Business Insight on Souq News. Once again, I am Olaoluwa Awe, and it is often considered normal for anything that has life to grow. But a 2021 State of Entrepreneurship in Nigeria report by Faith Foundation shows that over 71% of entrepreneurs on the micro level struggle to scale up their business. And that's why scalability is a very, very important topic that we need to discuss today. And luckily for us, we have a business coach to talk to us about that, Mr. Olaniyi Adeosun. Good morning, Mr. Olaniyi Adeosun. Hello, good morning, Mr. Adeosun. Well, meanwhile, while we try to get his audio on track, Mr. Olaniyi Adeosun is a former banker, an accountant, a product designer, a digital marketing consultant, and a trainer with a special skill set in birthing new innovative technology businesses, supporting existing nano, micro, and small and medium enterprises, SMEs. Mr. Adeosun, could you please unmute your mic so that we can hear you?
Yes, I'm sure you can hear me now.
Yes, it's better. Welcome to the show.
Thank you very much. Good morning, and thank you for having me.
Good morning. So in the context of business operation, what does scalability really means?
Okay, thank you. So when you talk about, in its very simplest form, it's taking your business from one level to another. Okay, so you start a business, and the first thing is you're going to register a business. So I see a lot of people who say they're doing businesses that are not registered. Once your business is not registered, you're not doing business, all right? So the first thing is for you to be able to register your business. So once you register the business, it has a name, you're able to do a letterhead, you're able to do maybe a complimentary card, all right? In some instances, you get an office, but you don't have to get an office at the beginning, okay? You start from your business from your desk in the house, all right? So that's what it is. So that's how to start a business. But in summary about scalability, right? You're talking about moving one business, all right, from point A to B. That's what scalability is.
Okay, so what really do you determine, or what can we use to determine if a business is scalable or not?
Okay, so that's a very good question. And I mean, it's really where my area of strength is, you know, asking me this question. And it's a question that a lot of people don't understand the answer. And so I take you from the what do you call it? The stages of businesses, right? So you have micro businesses, you have small businesses, and you have startups. So that brings me to startups. So a lot of people don't know the difference. So
please enlighten us.
A lot of businesses. So a lot of people are the business at the level of MSMEs, nano businesses, small businesses, right? A lot of people are not in startups, right? So they're doing regular businesses. So they're able to serve their neighborhood, all right, serve their local, right? Those are not businesses that are scalable, all right? So that's why you hear the word startup. So a lot of people don't know the difference. So you're looking at, when you say that you're running a startup, which means that that business is very scalable, all right? And the only thing that can make a business scalable is technology.
Now, before we move to technology, okay, please help us explain the difference between these very small businesses and a startup in terms of what people can see, in terms of operation, business operation.
Okay, good. So in the scheme of things, for example, in Nigeria, so when you're talking about a nano business, you're talking about a mom and pop shop, right? They usually don't have any kind of registration, all right? So that's a nano. So when you talk about coming to between an SME, you're right, an MSME and an SME, you're talking about enterprises, right? People go and register is what they call it, an enterprise, XYZ Ventures, all right, with CAC, the Corporate Affairs Commission, for example, all right? That's what that is. So of course, you move to the limited liability companies where you have to probably subscribe for shares, all right? Maybe you want to register a company that has 1 million ordinary shares, 500,000 ordinary shares, that you now have subscribers to the shares of the company. Now, before you can talk about a startup, you must get to the point where you have a limited liability company, all right? So that is the basis. Now, when you're talking about crisscrossing from being a limited liability company to a startup, you must be looking at what am I going to do, you understand, that will make me sit down, for example, in a place like Lagos, and people are going to be able to afford to get the benefit of my service in Sokoto. Right. Whatever you're doing, all right, that does not make your business to be able to be enjoyable in Sokoto, you are just a business. You are not a startup. All right. So you must be asking yourself that what are the things I need to do when I'm sitting in Lagos and I sell a product and somebody can buy it in Sokoto and it's delivered to the person and the person uses it in Sokoto and the person does not see you. It is only somebody, a business that is built up with a startup mindset that has that kind of capacity.
Hold on.
Just to be able to answer your question.
Hold on, Olani. If I understand you clearly, you are saying that no matter how big a business is, in terms of the number of customers you are able to attend to in a day, the number of products you are able to produce and sell, if you are just domiciled in a particular location and there is no way for customers or potential customers to have access to your services or your products from a different part of town or the world, you are not a startup and you are not scalable. Is that the point you're trying to make it?
Yes, that is the point I'm saying. So which means that you can be making money where you are, all right? You can be making money where you are, all right? But that, you've talked about scalability, right? You want the business to be able to scale, all right? That business is just local, all right? That business cannot go to Ghana, all right? So, I mean, I'm talking about one of the biggest, what do you call it? One of the biggest, fintechs, all right? So I'm in the fintech space, right? Now, so I don't want to mention their name. So this is it. They have an office in the US. That's where they actually registered with the Nigerian operating office. Now, let me say they're about 7 years old now, all right? They're fintech. And they've gotten into about a minimum of 10 African countries, all right? They've gotten to a minimum, and they're just 7 years old. So imagine the likes of the biggest banks that are over 100 years old, all right? That have not even gotten into those places. They don't have as many branches as this fintech that is about 7 years old. How do you explain that? You get it now? So it's not just about you doing business, that you're making a lot of money in your local, all right? So this is the principle about making money. I mean, if I have to get to the point where you have to make money, all right?
But hope you understand that some people may beg to differ because we come from a place where people determine the name of a business or what a business is based on how big it is. You just mentioned a business now, which is barely 7 years old, but they have branches in different countries. But you mentioned another company that is obviously bigger, but is just domiciled in a country. You know, some people may want to argue that out. Are you now saying that that big company is not even up to a startup or is not even scalable, while the smaller one that started within barely 7 years is really scalable?
Yes. So it's not about arguments. These are things. The kind of company that you're talking about that probably has a lot of weight in a particular company would end up becoming what they call a corporation. All right. To be honest with you, running a corporation has its loads and loads of challenges, right? Bureaucracies, taking policies, and a whole lot of things. All right. So those are the problems with corporations. All right. Now, so it's not a function of argument. You may choose to argue about it. We're talking about what the book says. All right. So if we're talking about you being able to scale, the big businesses have money. It's like an elephant. An elephant is huge, right? But think about the movement of an elephant. It takes a longer time for an elephant to be able to take let me say, take a walk from, to do a 1 kilometer walk, it's going to take a lot of time, right? For startups, it's not that way. You're able to take quicker decisions, all right? Your staff strength are lower, even though with the startups, majority of the work that is being done for startups is from the brain, okay? It's not the physical might, all right? It's from the brain. You're able to execute faster. You're able to move faster. You understand? You have lower overheads. You understand? And pretty much those are summaries of what a startup is. So whether someone argues with you or not, all right? That's for argument purpose, all right? But in terms of being able to do what you have to do, you understand? To be honest with you, that's who startups are. I won't say unfortunately, that's who startups are. They're able to scale faster, you know, for obvious reasons. Like I said, I talked about the issue of technology because they're able to reach out to more people, you understand, who are able to, you know, partake in the services that they offer.
Looking at it from the start of a business, what are the key things that differentiates a big corporation from a startup? Because some people want to know, in this sense, what exactly is a startup? A startup, in when you are considering their operations or how they do things from the very onset.
So from the onset, you have to be looking at the market you want to cover. That's number one. The second thing is, what's going to be your channel, all right? What channel are you going to use to be able to reach out to your customers? What channel? Channel is the major difference, all right? So let's say, for example, a company that that manufactures alcohol, beer, for example, or wine, okay? What's their channel? Their channel is that you have to load a truck. You have to load a truck to come to our location and pick stock. That's the channel to be able to get to the customers. All right. Now, so one of the easiest ways to be able to make that logistics part even easier is to use technology. That is on the logistics part, not the business itself. Okay. Now, the business itself is a physical business. You have to present yourself. Okay, so let me bring that, all right, to financial technology, all right? So somebody says that wherever you are, you can log in online and do a registration of your business and maybe do some kind of KYC all on your mobile phone. And within a short period of time, you are able to start to do business. Now, one of the key things about a startup is that you want to, as much as possible, which is a critical element, to make life easy for the customer. It's a critical element. The customer is the main point, all right? So this thing we're building, how does it make life easy for the customer? When you're talking about corporations, corporations do not take customers' satisfaction very centric.
Really?
So they say that, yeah, they're doing business, quite all right, you understand? But the customer that brings out his money to be able to patronize this business, what role does he play? What's his role in all of this, you understand? How do we treat the customer? How do we see him in the real element of that business? And that's why you see a lot of people, for example, yeah, like I said, I talk about fintech because that's my space. You see a lot of people move from the typical banks to the fintechs because that is where there's convenience, all right? So you'd see a lot more people come and talk to you, okay, oh, can you open an account? Can you do this? You can interface with somebody, all right? The reason is because the business model is different. What do we do with the banks? We go to the banks to go and open accounts. Is that not what we do? They're the big corporations. Right? We go to the banks. The fintechs tell you, we'll come to you. All right, if we have to, we'll come to you. If we don't come to you that way, we'll come to you through technology. We will reach out to you a bit more often. You understand? We'll be able to communicate with you and all of that. So those are the differences. Like I said earlier on, it's a case of you talking about an elephant, all right, that is very difficult to move because, they decided, okay, yes, we want to be doing manufacturing. We want to be called a big company. Do you understand? They want to be called a big company. In this instance, you don't want to be called a big company. You want to, as for startups, you want to identify problems that you can solve for people, and the reward for the problem that you're solving for them is the money you get.
So what then is the, well, what are the main advantages of scaling up a business in the way that you have explained it?
The advantages cannot be overemphasized, all right? Because if you're starting a business from day one and you're not thinking about how the business is going to scale, then why are you starting the business? That is the question, all right? So in the scheme of things, right? So let us get this in proper context. Up until now, the businesses that grew up into becoming corporations did so not by their own fault, because it was how businesses were run at that time. All right. So it's not because oh, they didn't do anything wrong. No. It's not because they did anything wrong. No. It's because, oh, at that time, all right. But the unfortunate thing is that while they were growing, they were not thinking about technology. Even when technology came, all right, they could not sit down within those corporations to be able to say, okay, look, oh, we need to have a rethink. Technology is upon us. Can we divest our processes? Can we divest our processes and make sure that we lighten up how, you know, we offer the services? Do you get it? So at the end of the day, the business must understand that, look, okay, there's technology to be able to leverage on, you understand? And in leveraging that technology, they can actually grow their businesses.
Oh, thank you very much. But in terms of profit, you know, how does scaling up a business help the business make more money?
Profitability, that's the only reason why you're in business, all right? Because you want to make money. You want to make money. You want to be able to pay your staff. You want to be able to expand. So all of that you want to do is from your profit, okay? So I talk about an analogy of you earning 1 naira from 1 million people and you earning 1 million naira from just one person. The person that is truly in business is the person that earns 1 naira from 1 million people, because you're sure that you have a diverse, number of customers. The more customers you get, the more profit you're able to make. Again, one of the models that makes business to grow faster is the principle of referrals, all right? So if you have 1 million people using your product, there is a possibility that one person out of the 1 million person is going to introduce that product to another person, all right? So that multiply effect keeps you becoming more profitable, all right? So the issue of being able to scale is largely dependent on the number of customers, all right, that are using your product. Again, your profit lines is also another thing. So you're doing business and you're asking yourself, how many sources of income, do I have in this business, all right? Because if one source of income shuts down, you are still able to make money from the other sources. So your business continues to run. All right, so you cannot do without it. For you to be able to talk about profitability, you must be very clear, all right, about the channels. You must be clear about your product offering, all right? You must be clear about your numbers. How many people are using our product, you understand? The more you are able to expand your products to more people, all right? And it's very, very critical. All right?
Thank you very much.
You must expand your product to more people for you to make more money. That's what it is.
When you were explaining what really makes a business scalable, you talked about the ability of the business to use technology. And you talked about how some small businesses are not scalable, while some big corporations as well, some big businesses are not scaling up. But some of us like to think that all things are possible. You know, yeah, things might be wrong in one aspect or in a business, but there's always a way to move from point A to point B, moving from the status quo to the better options, which is exactly what scaling up means. So how can we scale up these small businesses that are not initially structured with technology?
There's no business that scales by coincidence. No, there's no business that scales by coincidence. Number two is that for you to scale, you need technology. Number three, technology is expensive. Technology is expensive, all right? So when you're talking about dreaming and saying, oh, you want to scale, you must ask yourself, do you have the money to pay for technology to do it? All right, you're going to hire manpower. You're going to buy, in some instances, buy software. In some instances, you're going to pay for cloud services, all right? In some instances, those cloud services will not come in your local currency. Are you prepared for it? All right, so it's not just that you want to mouth it and say, okay, oh, you want to scale. No. It doesn't work that way, all right? So, and again, I can tell you for free that because of all the challenges that are involved in scaling, that is the reason a lot of people sit down in their small businesses, okay? They know that to scale is tough. You know, I'm not going to come here and tell you that you want to scale. No. It's easier for people to be at the lowest level of the Maslow hierarchy of needs, like I talk about, than for them to get to a higher level where their stories can change. And human beings want things that are simple. Scaling a business is not a tea party. It's not a thing that you say, oh, because I want to scale with my mouth, all right, it's going to scale tomorrow. No, it's not going to work that way. You must be prepared, all right? You must have the money to be able to do things. You know, you're going to have to, you know, there's just a whole lot. I mean, I can't even start to talk about it. There's a whole lot. For you to think about scaling from a small business, you got to be deliberate about it. You got to be deliberate about it. So it's just a matter of choice, all right? But it's possible. So what I'm saying is that it's possible. Again, depending on the kind of business that you're doing. So it's not every business that you say you want to drive with technology, no. But from the beginning, you can make up your mind, you can take a decision and say, this business I want to go into must be driven by technology at some point. So from the point where you're doing your design to start the business, you are telling yourself that what is that business I'm going to do that at some point I will need technology to be able to scale it. That's at the beginning. If, for example, you're a organizer, you're on the roadside, you're fixing tires for cars, how do you scale that with technology? It's not going to happen. You're already a organizer. It's not going to happen. But you can say that, oh, I want to create a particular business, and I'm like, okay, the whole plan is that I want to make sure that people are able to use my business, whatever I'm creating in Delta, use it in Ibadan, use it in Kano, you understand? Yet I'm based in Lagos. You can do that from the beginning, all right? And the truth about it is, when you do that, you're almost so certain that at one point, you're going to be making money, whether it is one naira, from people across the country. That's what
Thank you. Thank you very much for that. Now, we've talked about small business. Let's also talk about the big businesses. I know that you mentioned the banking sector, for example. I know that over the years, there are some banks that have tried to introduce some technologies. I mean, we moved from a banking sector where we practically all needed to go to the bank to pay money, to withdraw money, to a banking sector where we can do transactions from our phones. I believe there are some other big businesses like that, maybe struggling to scale up. Is there a way they can also adopt technology to get to that point where they need to be?
Who are you talking about? The banks or who?
I mean, big businesses, big established businesses. We talked about the small ones earlier. I mean, you mentioned the organizers and all of that. But what about big established businesses that are struggling to adopt technology or introduce technology into their systems? What are the key things that they need to do to scale up?
Oh, so that's very interesting. That's really very interesting. So this is it. When you have money, there's a lot you can do. Okay, there's a lot you can do. So you need to hire the right people. Human resource, that is quality human resource, is expensive. The people that will do your work and do your work properly, they're expensive to hire. All right. Now, but you have the money. Okay, that's number one. Number two, the willpower. You've made up your mind that you want to scale. Now, for you to want to scale as a big corporation, all right, you must break down your units. all right? Because you become very top heavy, okay? In most of those big corporations, people that are at the top are usually very, very difficult to become dynamic. It's always a problem, all right? Because there's a particular way they've been doing business, they've become legacy businesses, all right? This is how we used to do it, all right? So it becomes a bit difficult. But the ownership of the business must make up their minds, all right, that it's about time for them to take the business to the next level. So I give an example. I've worked in First Bank before, all right? So I'm talking about First Bank. That's where I worked as a banker. One of the banks I worked, actually. Now, so at some point, they said, so we came in when they had a project called Century 2 project, all right? So they used us to replace the old hands, all right? So it was deliberate. So they had consultants who were bringing in computers into the bank. Then they never used to use computers in the bank, all right? So they needed a new thinking. So for you to say that you want to do that, all right, you must come up with a new thinking that, look, this is the path that we want to take this corporation to now. Once that decision is taken, that decision must be communicated to everybody within the organization. If you do not want to be shaped out of the organization, then you must write a test. All right, so there's going to be a test that is going to be conducted. So we're giving you a fair hand now for you to be able to prove that you want to be in the new organization, all right? So that your mindset can start to shift. So once you're able to prove within yourself that, yes, you can be a part of the new system, because we're about to bring in new people with a new thinking, are you going to be a part of it? If you're going to be a part of it, come and test your might. If you're not able to be a part of it, we're going to move you out, you understand? Because most of all, the business itself is a going concern.
Now, another question I need to ask is that a good number of businesses scaled up because of growing demands. And there are also businesses that, despite their moderate demands, they just took a decision that, okay, I want to improve my supply, I want to make more money, so I want to scale up. Which one of these two scenarios do you think a good number of Nigerian businesses should adopt? Should you wait till demand forces you to scale up, or should you do it beforehand in preparation for what you really want for your business?
Okay, good question again. You don't produce a product that is not in demand. No, you don't do that, okay? So the proper thing is to ensure that there's demand for your product, all right? You cannot produce, so let's talk about this corporation that you're talking about. Let's say, for example, an organization that produces maybe soap or produces milk, for example. Yes, it's understandable that, again, there is a research department that handles the market surveys, all right? So depending on where the organization is, whether it is starting or it is doing business or wants to scale. Excuse me. So when the business, if for example, the business is at the point of starting, we want to be a big corporation, you don't produce too many goods, right? You produce some, get it ready for people to be able to make order. From what you get, your financial control department is able to give you information about the orders that you have, all right? Because of the fact that you already know that, oh, these are our minimum order quantity, for example, you can scale and say, okay, look, let us add 30% to it. So you do another additional 30% production, all right? That becomes a buffer stock because, yes, people are already demanding from you, all right? Now, when it comes to the bigger corporations, all right, who are even talking about wanting to scale because they're at that point where they've made a lot of money, they must inject capital, all right? They must inject capital to be able to spread physical branches, all right? So there's one noodles we eat, you know, somewhere in, well, we eat Nigeria here, all right? Because they're big, all right? So they have offices nationwide, all right? They have maybe trucks or have partnerships with logistic companies that move their goods to those locations, you understand? and they're able to make supplies to their customers in the markets. All right. So depending on where the corporation is, all right, that's what will determine the quantity of stock that you need to keep per time, all right, and you're able to supply it for it to be able to meet the needs of your customers. That's what it is.
Now, for a good number of companies that have scaled up or that are scaling up, they usually adopt technology in different areas of their businesses. For example, you talk about in production, sometimes they introduce technology at that point, sometimes in customer support, sometimes in their supply chain. But what are the key areas, what's important areas in business operation should this technology adoption focus on?
So I cannot tell you that there's just one place to focus technology on. If you want me to tell you about a place where any business must focus technology on, is marketing. Marketing. Why? That is where the money comes from. All right? In organizations, when an organization is going down, all right, the last set of people that are fired are the marketers. All right? They're the ones that bring in the money to the business. So if that is the case, if you're talking about creating technology to make sure that your business grows, your focus all the time must be marketing, because that's where money is. So that's why you find out that, I mean, in the years back, they hire people in banking, they probably put you in operations and tell you that, look, you must also bring customer. It's deliberate, all right? Because if you say that you want us to pay you salary, you must be asking yourself that the salary you want us to pay you, who brings the money in? All right? So you must be a part of the people that bring in the bottom line, okay? That's why you find out that organizations don't joke with their marketers, right? So every area of the business needs technology because all the processes are all intertwined. They're all intertwined. You cannot say one does not need, but the level of technology that is required for each and every one of them all differ, okay? Let's say, for example, the supply process. The supply process has to also be driven with technology, because once that area is clogged, how do you get the goods or services that you're providing, all right, to the customer when the value chain in terms of you being able to process products out of the organization is clogged? You're going to get into trouble.
Thank you. One last question before we call it a day on Business Insights today. So for companies that are already thinking of scaling up, or those who are already doing it, you know, are there key performance indicators you would monitor to track the business's scalability efforts?
Yes, there are always KPIs. I mean, your KPI, your major KPI is your sales, right? Your major KPI is your sales. The second most important KPI in your business is your customer service satisfaction KPI. So what are your customers saying? All right. So one thing you must understand is for you to be able to get the customer is usually not a problem. Customer retention is extremely very important, right? So which means that when we get the customers, how do we keep them? When we get the customers, how do we resell to them? All right. So if you ask me, these are two, because I mean, those are the key guys, you understand, who drive the business. Finally, the kind of staff that you hire. The business is going nowhere if you do not have the quality kind of staff who will drive the vision of the organization. Thank you.
Wow, that's on a very big note. Thank you very much for your contribution to Nigeria's scalability efforts, at least the businesses here and the businesses all around the world. You know, for those who are watching, our guest is Mr. Olani Adeosun, a business coach. Thank you very much for your time once again. And that's how we wrap things up on Business Insights today. I must say that I've learned a lot. You know, according to Mr. Adeosun, scalability is not about the size of the business. It's about the business model. That's what really takes the business from one point to another. I am Olaoluwa Awe. Let's do this next week, 10 a.m. to 11 a.m. on Souq News. Have a nice day.